started? Okay. Hi, guys. What's up? Hello. Good afternoon, I guess. I'm Gavin from F1 Academy of Technical Analysis, and we're back on a Monday. And well, we're gonna kickstart off with a whole lesson on the bearish market. Okay, so before I go too much into the details of everything, I'm going to tell you guys a quick disclaimer as you'll see on the screen. The information provided in this analysis is for informational and educational purposes only. Does not constitute financial advice, investment recommendations, or any offer to buy or sell any securities, stocks, and so on. Stock trading is it involves a lot of significant risk, and past performance does not indicate any sort of future results. So investors should conduct your own research and consult with a qualified financial professional before making any decisions. Please do your own research, I beg you. The author and publisher are not responsible for any financial losses or gain resulting from you using this information. Because again, this is just to give you some tips. Okay. So let's kickstart off. We've kind of been going through a whole bearish phase right now. Um, as I'll show you in a quick second here. There we go. So, like I said, since last week, we're kind of in a bearish turn. As you can see, it's a downtrend, very clear downtrend. But don't worry. I know you're like, oh my God, how am I going to make money? Well, look no further. We're going to give you some tips. We're going to help you walk you through this, to help you survive and thrive, hopefully. So without further ado, let's kickstart this. Okay, so just a little quick recap to let you see the market. Like I said, the KLCI is currently still in the bearish phase as it is in a bit of a, let me switch real quick. Okay, so it's in a bit of a downtrend, I said, as you can see. There is the blue line is the EMA 50 and the red line is the SMA 200. So what I want to tell you is that there is a death cross right here. Okay. A death cross, for those who are not familiar, is basically it's become long-term bearish. But, you can still make money through this. And we're going to talk through some strategies to walk you through this to make you a little bit more confident with your decision making. I'm going to help you not catch a falling knife because I know a lot of people like to catch falling knives. I have, honestly, I have. Okay. So, um, anyways, sorry, there's a little bit of a lag. So we're gonna walk you through this in a bit of a matter of, I'm gonna leave this screen on, as you can see, the whole KLCI. So we need to thing as a whole, at least for the current, okay? So what you need to do is trade defensively. You got to protect your capital first and then worry about your profits later. So that means you shouldn't be afraid to cut loss when something doesn't look good, right? Because if you hold something and it's a bear season. Oh, sorry guys. Can you guys hear me? Just want to check real quick. I'm being told by my technicians that it's a bit unclear. Just testing. Can you guys hear me? Okay. So like I said, KLCI, kind of a bit of a tiny bear season here. So we are going to teach you how to make money or strategies that you can learn and apply so that you can still be profitable or at least not have losses during the season or minimize your losses. Because in a bearish market, you want to protect your capital first and then worry about profits second, right? So trade defensively, follow the trend. If you see it's in a downtrend, like downtrend here, you don't fight the downtrend. You're like, oh no, it's gonna bounce. It will bounce, but when is it gonna bounce is a different matter. So you need to keep your eyes open and look for signals before buying, right? Okay. I know. I'm just going through some KPI. I'm sorry for the boring stuff. I really am sorry. Patience, okay? Sometimes trading, the best trade you can make is not having a trade. Because if you jump in half-heartedly based on greed or fear, you really end up hurting your wallet more than you should. And I've done this before too. Again, full disclaimer, okay? This is from mistakes that I'm sharing, okay? So I'm going to give you a good example. I'm pretty sure some traders or a lot of traders tried to catch a falling knife, like last week. Remember the glove stocks, Harda, Gosan, Top Glove. It bled red. And they thought, oh yeah, it's over for one day. I want to try and get the rebound. And they got stuck instead with more losses. So let's not play a guessing game in this kind of market. We're gonna wait for a clear trend reversal or a nice rebound before you do any of this. So we're gonna go over some technical strategies first, if that's okay. I'm gonna illustrate. So what you want to look at is like key patterns, like key technical patterns that you want to look out for that will tell you it's reversing in a bearish way or it's no longer in an uptrend, you know. I know I'm being obvious here, but I'm gonna give you a good example. So in RE, okay, semicon, but I'm just gonna give you a very quick, let me just be artistic for a second. Sorry guys, but my line is not good. Here you go. So, I believe I've talked about this, but just for the sake of people who have not heard this, I'm just gonna go over this real quick, okay? Sorry, let me find my tools to draw you a nice picture real quick. Okay, so this is what we call um a double top, okay? A double top usually signifies a reversal of trend. So in this case, it shows that Inario is unable to break above the SMA 200 and reversed back in a bearish direction. So you can see that once they have the whole line here, the M is formed. They broke through the support, rebounded. Well, I wouldn't say rebound, retraced to test the whole support that is now resistance. Did not make a recovery and went down. As you can see, they even opened up with a whole gap down today. So, yikes, stay clear. Okay. Don't be a hero of this one. Again, these are just examples. Okay. I just had to go through them real quick to show you like patterns that you don't want to play around with. So double top is one of them. Um, okay. So another one, we use YTL, right? I know you guys love YTL. A lot of you guys do. Utilities and everything. So sometimes you won't catch the top. You think it's recovering. But then it keeps going down. You're like, oh no, what happened? Why? Well, this is a key pattern, what we call a bit, let me get my arrow here. This is what we call a bearish flag. Okay. So a bearish flag basically is just a pause and then it continues. Hence, it's called a continuation pattern. Okay. So it will continue the downtrend. A lot of people get trapped by this. So be aware, draw your lines, be very clear of it. Okay. As you can see here. And we'll use YTL for another example. It's not that great of an example, but we'll use it anyways. Um, YTL here has a sharper version. This is not a flag, by the way. This is a rising wedge. Um, Basically they function the same way, but I'm just showing you variations so you're aware and just not like caught all of a sudden. And even if you don't use I'm just gonna clear these lines. Even if you don't use these patterns, I'm gonna show you a very clear one right here. See? Okay. Let's say we're not using patterns like flags or whatever. Oh, look, support and resistance broke through, you know, and then it broke through, went to retest, could not break through, and then went back down instead. So, there's multiple ways to spot it. That's why I said in the bearish market, you want to wait for a clear cut signal of a nice rebound or something like that. And then another one I want to share. Sorry guys. Okay, I'm just gonna see. This one was a little bit more complicated, so I'm gonna drag all my lines that I had ready for you guys a little bit before. Okay. So I want to share with you what I would call a classic head and shoulders, right? See, I cared so much that I did this. Anyways, jokes aside, you're gonna look here. Very good example of this. Okay, now I will zoom back in. So head and shoulders, you have the shoulder one, the head, and the next shoulder, and then it breaks. So a very clear example of this is on the forming of the first shoulder, it has high volume. and it rallies to the top, from the head, but lower volume than the shoulder. And then basically, when it reaches the neck, shoulder, no volume, and then it breaks through the neckline. So when that happens, you expect a one-to-one, which is a really good educational reason here. What I mean by this is a one-to-one. So from the head to the neckline is how far it should, in theory, go back down. Okay. So if you care to look over at the screen, um, you can see that, oh wow, the one-to-one bearish ends exactly where the support is. You can see that. It doesn't always line up beautifully, but this is just a nice, really nice, good example, classic textbook one to show you head and shoulders. So these are all bearish chart patterns. There's more, but I'm not gonna go into detail about that right now because that's not the purpose of this. Um, and you have further confirmations of a bear market, like I said, the 50-20 MA def cross. You see this a lot. Just to give you example, you see the blue line is the 50, the red line is the 200, and right about here, wow, look at that. See that cross there? And the moment that cross formed and was confirmed, wee, nice waterfall, right? So this is just an example, right? Another one is you want to use is the RSI, relative strength index if you want to look for it on TradingView. But the point I'm trying to make is in a bear market, I would kind of wait before jumping into a trade. You want to wait ideally for something like, sorry guys, something like this, right? See, it's a nice cross up. It goes up. But let me see if I can find a better one for you guys to look at here. Sorry. Is it YTL? Oh, sorry, guys. Let me find a better one. But while I'm looking for it, anyways, the point I'm trying to make is, you don't jump in just because it's oversold. You gotta wait for a cross, and then ideally you want to wait for a confirmation. If you miss it, then oh well, you miss it because it's better you miss an opportunity than catch a bad one, right? If you catch a bad one thinking you're going to be very secure and you're not, then you're in trouble. If that makes sense. Another one is the MACD, moving average convergence divergence. Again, if you want to use the indicator, just sharing some examples. So one thing you want to take a look at, right, is here. There's a cross, but one thing you need to take care is that you see the zero here. If it's below the zero, I wouldn't play around with it. I'll just wait because you have to wait for it to cross. If it doesn't cross the momentum line, it's going to tell you that momentum is weak. So even if you get all these bullish cross, whatever, you could be trapped, and then you'll be stuck holding a dead stock. I know I had an example somewhere, but I can't quite find it right now. When I find it, I'll get back to this. But just remember this, okay? So you want to wait for the line, like right here. You see? I'll show you guys can see right there. Crosses the zero right here. And the moment it crosses zero, look at it fly. See that? So that's just an example of things you need for confirmations, especially in the bear market, right? And if the moving average, if like a stock is going below the 50-day moving average and the MACD is below zero, don't buy the dip. Just wait for a clear break of above the resistance because you want confirmation. In a bullish market, it might be different. But like I said, we need to change, right? We need to change how we approach the whole bear situation. You can still go hunting, you can hunt bears, So we're gonna change some strategies in a weak market. So I know most of us are traders, the investors too, but the idea is trade short term and take profits quickly. Buy near support, sell near resistance instead of hoping for long term growth, right? If a stock is bouncing between a range, buy at the support and exit like slightly before, like 2 cents before the resistance, instead of hoping for it to like jump a whole ringgit and then like, oh, I'm gonna make my money back. You can be optimistic, but again, bear season, guys. So caution is advised. Now, this is not the best example, but I'm gonna give you a reasonable example now. This is what I mean, right? So we can see a lot of times, especially okay, RGB, okay, RGB International. See that? It's ranging back and forth, back and forth. So especially this is a $100 stock, you could have made like whole 50 cents, 55 cents, basically like 10 pips off it, right? 10 bids off it, sorry. Um, so you can do ranging stocks like that. You can find stocks like that, you know. But if it's a clear downtrend, like it's just all the way down, right? Just don't even touch it. Um, be cautious. Don't try to be gung ho and like hold it like that. But in the bearish market, it's also a lot easier for you to play with ranging stocks. Make sure they actually have a good range, okay? Don't just close your eyes and just shoot for one random stock and be like, oh yeah, I can make money of this. It's not the best approach. Again, because all my advice for you now is to minimize your risk and exposure and protect your capital. Profits are second, okay? So making sure you're not making bad decisions they're gonna regret later. And for example, okay, what stocks are good? Oh, that's a loaded question. Okay, like I said, disclaimer: it's not buy sell advice. This is just a topic for discussion. Generally speaking, utilities, consumer staples, real estate investment trusts. I'll show you a few examples of this as we go. Okay. As you can see, I already have a whole watch list to give you guys examples from. Right. So consumer staples, QL. Okay. I'm sure a lot of you guys know QL. We're gonna zoom out for a second to show you, right? Look at that. It's a beautiful uptrend since 2023. Probably longer than that, actually. See, it actually has been uptrend. You get the idea, okay? I'm not gonna over explain. The point is you get the idea. And QL makes eggs and so on. You know QL. Okay, so we see the eggs in the supermarket. Nobody's gonna stop buying consumer staples just because the market is bearish. I'm not gonna stop buying milk the next day. I'm not gonna stop buying eggs. So they're always gonna have a sort of stability in the market. So you're gonna look for things that will be resilient throughout volatile changes in the prices and the indexes and so on. So QL, I said, uptrend is still uptrend. And despite January and whatever, you can see that they actually managed to stay above a certain price level. Despite any sort of pressure, they managed to be still maintain their upwards direction. And even if they go down, they don't go down for long because I said it's a staple. People are going to use it. Another one, finance. I know, okay, this is a bit of a pricey example, but finance, okay? Um, so finances, you can see a bank, other banks probably. But the idea I'm trying to get at is despite anything, like see, oh wow, they're not affected at all by let me show you the date here, okay? From December until February now, they're not exactly affected by negative news or any sort of bearish sentiment at this point. In fact, they just kept going or ignored it entirely. So, it doesn't bother them. Now, like I said, rates, real estate investment trust. Sun rate, look at that. Wow, since July, August last year. Probably long. Like point is, yeah, you see, I'm going to get redundant if I do this. So these are just things to look at if you're worried about where am I going to pick my next thing. Because usually these kind of counters or stocks will give you good dividends. You gotta research that yourself, of course. I'm just giving a general idea because they're basically solid, they're stable. And okay, so I told you how to change your mindset. I told you what sort of things to look at. But what we can look at right now, what we can look at right now is the next step after that is reduce your position size, use a stop loss, right? If you trade it like huge lots, maybe not trade such huge lots this time until because you know you want to limit your risk. If your normal trade size is like 10 grand, right? Cut it down to maybe five or three. I know three is small, but something is better than nothing, right? So it's like five, okay, five, seven, whatever. But the idea is you need to reduce your exposure in a risk-filled market and set a stop loss or stop limit in this case to avoid like big drawdowns or like what happened to Harta. I mean, like Harta is a very isolated example, but I'm just giving you examples of like big red bloody candles, okay, and avoid that just to give you a good feel for it. And last but not least, you're like, oh no, why are all these things on this on the watch list? I'm getting there, don't worry. If the Malaysian market isn't doing well, you can look to other markets, Forex, gold, global markets. I'll get into it in a second here. So, like gold, okay? Gold usually goes up when stocks fall. Okay, so I'm just going to give you a good example. Wow, KLCI is in a downshot, right? Wow, look at that. Gold headed in the opposite direction. Just to prove my point, okay? You get the idea now, get the picture? So you can look at gold. Um, you can do Forex like USD Malaysia or so on like that. I'm not recommending any pairs, by the way. I'm just giving you an example, right? So take advantage of the fluctuations. Like, let me give you a good example to think about for a second. Let me see if I can find it. Right. So when the ringgit weakens, let me see if I have it here. Nope, I did not. Okay. I guess that wasn't good enough. But the point is, um, I'll show it to you guys. But the point is, like, when the ringgit weakens, holding USD can be a hedge. So I'm going to give you an example. If Malaysian ringgit depreciates against USD, you can profit by going long on USD Malaysia or Malaysian ringgit, however you're going to pronounce it, the dollar ringgit. And so that's one way, right? Another one is you could look into US stocks and ETFs. Some industries will outperform even when Malaysia's economy is slow. You know, you can take a look at gold ETF. For those of you who still don't want to go on Malaysia, that's fine. Look at that. Look at that. Since October, up. So for those of you who want something stable, there's the gold ETF right there. If that makes sense. Um, so defensive stocks help you protect your capital in certain times that you can diversify to forex and foreign markets to give you an extra security. Don't put all your eggs in one basket, okay? Um, I know I forgot to mention about the US stocks, right? The beauty of it is, despite I know like, oh, Gavin, what about all the news in the US? It's really not okay. Look, I'll give you a solid, okay? See these three solid ones here? Look at that. Procter and Gamble. It's a US stock. They are consumer products. What are they? I'm going to give you an example. Gillette, Downy, Tide, Ambipur, Febreze, Vicks, Pampers, Swiffer, um, and a lot more. But point is, this company makes them, right? So, even in the downturn, you can even see this nice little range for people to play with right here. However way you want to arrange it, you know, two different ranges, whatever. But the point is, Procter and Gamble is a defensive stock in the US, and the US market is larger. And a lot of people use all these products. We use these products, right? So they're not going to like just dump one day, and because no matter what happens, people are going to keep using these products. Okay, cola. Look at that. Like we literally 14 days ago. Look at that. I don't even know how huge a jump is. 3% open up, Look at that. Or 2%, either way. But nobody's gonna stop drinking Coke. You're gonna drink Coke. I'm gonna drink Coke. Or you get the idea. The point is, a lot of people in this world drink cola. They're very solid stock in uncertain times. More defensive stock for you guys. Third one, Johnson and Johnson. Like Johnson baby. Look at that. Being up since December. So despite all these uncertainties, like these are certain ideas to get your head around on how do I preserve my capital? Where are my other opportunities? I'm not sure what to fish for, So that just gives you a clearer picture of where you want to look at and where and how to diversify while we wait for the market to strengthen back. You want to put it that way, right? So the key takeaway at this point is, sorry, just let me get there for a quick second, right? So those are just some ideas to help you change how you view things, look at different opportunities to make money. Bearish markets don't last forever. However, we do have to change our method of operation in them, right? We can't trade a bear market the same way we trade a bull market, unless, of course, Forex you can short, but you get the idea, okay? You want to be defensive instead of aggressive. Look for safe places, quick trades instead of I'm going to buy and hold for 3 years and hope they go up. I mean, if you have the tax bracket, if you have the capital, and you're confident, by all means, this is just for a general range of people that can just like dump 1 million and wait. And last but not least, patience is key. If the setup doesn't look good, hold your portfolio in cash. Wait, it's a discount, but don't just buy everything on discount. It might drop even further. You gotta wait for, like I said, you gotta wait for a clear sign of reversal, nice pump in volume, etc., etc. Okay. So that concludes basically what I'm saying in how to operate in a bear market. If you have any questions, drop it in the chat and I'll answer them. I can analyze whatever you want me to analyze. Yeah, if you guys want me to like look at these stocks, whatever, Forex, crypto, just name it. I'll look at it. But if you don't have any questions, that basically concludes all my points in how to like get through the bearishness of the current moment. You know. Okay, okay. I will give you a little bit of Gamuda. Okay, okay, we'll go through Gamuda. Let me see that Gamuda here. No, okay. That was just my example. Let's go through Gamuda for a second here. Okay. So Gamuda actually is kind of nice for this example for multiple reasons. I'm gonna use a box region instead of a line. I'm gonna show it to you in a second. Sorry, yeah, just patience for a second. So Gamuda dropped in January, made a double bottom. As we know, that's a bullish pattern. Went up, broke through the whole EMA 50, retested EMA 50, and went up. There's a steep drop today. Um, but as you can see, it hasn't violated through the whole region. So we can still consider that support valid. However, I wouldn't like quite jump in right now. I would like wait till tomorrow to see what it is or by the closing before I make any decisions. But to answer your question in short, Gamuda is still bullish. It's still good. It's just that there's a sharp drop today. Let's go through Eno. Okay, sorry guys. Screen's a bit small. My bad. Eno. It is this Eno, right? I just want to be sure. Um, so similar with Eno, but I would be careful about these kind of stocks. In terms of Eno, it looks okay to me, but I personally am not a fan when there's a lot of wicks, because there's a lot of it's not as liquid as I'd like it to be. Okay, if it's not the right Eno, do let me know. Just FYI. Anyways, um, Eno is bullish and it has a nice pattern too. I want to see this triple bottom, or in a way, it's a triple bottom. But the point is, it broke above and went back to test the resistance turn support. So it's good. It's still bullish. I got nothing bad to say about it. It looks okay, solid. Um, yeah, it's good. Um, let me a quick, yeah, it, basically. But you can see there's an old level here, so you want to be careful. It's gonna it has retested twice already, a few times. It can't really go past the level. So, but it's bullish. So stock's good. Okay with it. Any more takers? Sunway? Cool. Sunway. Let's do Sunway. Okay. I can't call this how do I put it? I cannot quite call this a double bottom, but needless to say, um it broke above the EMA 50, which is a good indicator of strength, right? So you want to remember that part. It broke above the EMA 50, went up to the previous resistance. You can see here. You draw the line. Yeah. Resistance, bounce back, touched, use the EMA 50 support. That's why I love EMA 50, by the way. It's a really good support. And broke through. However, today they did break through the resistance a little bit right here. So the support, sorry, broke through support. But this is intraday. So in the Malaysian market, um, personally for me, personally, okay, um, I don't draw conclusions till like 4:30. So there's plenty of time to like, after lunch, yeah, people could come in and push it back up, institutes, investors, retail traders. So give it time. It's still good. And even if it does close below the whole resistance here, the support, don't worry. What you really want to watch for is for the price to remain above the EMA 50. If it does remain above EMA 50, you're still good. Don't worry about it. And the momentum is above zero, just FYI. So the momentum is there. Um, just sit back and watch for now. There's nothing bad about it. Any more? If there's no more, I'll give you one little tidbit, and then I guess I'll let you guys enjoy your lunch. So currently, Bitcoin is a little bit bearish, but it's still long-term bullish, right? It's just going through a whole range of motions right now. Like, let me get my trusty little rectangle, right? It's going through, like I said, a range. You want to be more specific and disciplined about it. However you look about it, it's going through a range of resistance. As you can see, it has a resistance here, 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 here. The point is, it's still long-term bullish, still good because, yeah, in fact, it became bullish in October. Nice little cross there. If you went in last year, congratulations, you made like a a lot of money. 50% even if you use no leverage, put it that way. Harta? All right, let's go through harder right now. Sorry, yeah. Ah, well, stay clear. Um, that's all I can really say. Stay clear of it for now. It is going to test a level of support here, as you can see, right? It's tapped it previously. So 2.32 or like, I'm gonna be specific here. 2.32, 2.31. That's the next level of support I would see. But I want to point out to you that you might want to wait right now because momentum is definitely below zero. So the bearish momentum is still going. And there's no upturn yet, right? Look at this. That's not even an upturn. It's just straight. So stay clear for now. I will wait for prices to stabilize. In fact, I might even look towards 2.31. Don't buy. I didn't say buy. Look, okay. And if you catch a nice rebound, good for you. But wait, it's not quite ready for you to do anything. K Web. Where is K Web? Can somebody give me an idea of what K Web is real quick? It's not showing up. Are we talking about this one? No, doesn't look like it. Vina, do you want to help me out here real quick? I assume that's what you're looking at. These are very erratic at the very least. Um, not wrong to go through it. It is technically bullish. Momentum is there. Okay. So the ETF itself, okay? Okay, let's see here. Here. Okay. Well, you can see it was mirrored in the same. Anyways, K-Web, I would say it's pretty volatile. There's a lot of jumping up and down, a lot of gaps. If the answer you're looking for about whether it's bullish. That much I'll confirm, right? However, take note, it is in the overbought area. However, momentum is very strong above the zero, you can see. But personally, for me, it's a lot of gaps. I myself am not, I wouldn't touch it. It's just me. But if you just wanted to confirm itself, it's bullish. Yeah, it's bullish. Yep. But you want to be careful around this area. It's testing all resistances as well. So take note on that. Any more questions? Or if I get no questions, I'm gonna let you guys off for lunch. Okay. Gentag? Okay. We're gonna do Gentag. Ooh. Oh yeah, we were just talking about this. Okay, cool. Where were we? Yep. I just used this as an example. So be careful Okay, Genentech is the last one, apparently, I was told. So, all right. So, Felicia, just to answer your question, Genentech is technically bearish currently. It broke through the whole EMA 50, and it technically has been downtrend since August. Okay. So, just take note on that real quick. Okay. Momentum is just dropping below zero, by the way. So that's your first warning sign already. I'm not gonna give up on it entirely, right? But like I said, let me see if I can draw for you guys easier. I said this is sorry guys. Okay. Okay, so I'm gonna copy paste real quick. It's not gonna be pretty. Okay, so like I said, this to me is a head and shoulders pattern. Okay, so I take this naturally as a sign of bearish reversal. Now, how far is it gonna drop? Is usually a one-to-one from the neckline to the top of the pattern, give or take. Sorry, yeah, just a second here, and I'll give you an estimate of how far it can go. So it broke the neckline, and from what I can see, from what I can see, we can expect it to drop at least to here, which is also an area, a region of support. Okay. I normally draw lines, but some of them are a bit interpretive. So we'll say it probably will drop out. It will at least test that block of area. And if it can rebound and you can find bullish candles from that, you know, you might get a discount. But I'm not saying buy it, just letting you know that's how far it can drop. So we might be seeing it drop to 108, maybe 110. But what you want to keep track of, like I said, for the beginners, momentum, make sure it's going to head above zero, crosses back up. And just because price is below 30 does not mean I can buy this, right? You want to wait for a cross up before you buy it. Like let me give you an example. Like here, the moment momentum crossed up here, see, it climbed up. So you need confirmation like that. And further confirmation, if you were a good disciplined trader, you would have a cross here, right? And then across here. So you have double the momentum and the confirmation. And this happens like a day before the huge spike. So you will catch these opportunities. Okay. So that's just an example. With that, I am out of time, and that was the last question I took. So thank you very much for listening in. Have a great lunch. See you again next time. Pretty much.